Has America lost the trade war? That's what we're going to talk about this week on Milkshakes, Markets, and Madness. And the reason we're going to talk about that is because tariffs are obviously directly related to the trade war. And tariffs have been the number one dynamic that has affected markets a year to date. They affected the big drawdown we saw at the end of Q1 into early Q2. The absence of tariffs were the primary driver for the huge rebound we saw in the second half of Q2 and so far in Q3. But now we have just in the last couple of weeks had them come back online. And so it's only now in the next few weeks probably, or the next few months, where we're going to start seeing the effects of the tariffs. And it's important to understand what the tariff levels are and how they got there. But it's not just about what they are and the levels. It's about what it means going forward. And we've talked about the framework that we have used to look at markets, over the last couple of years. And the one we've been hitting big this year is to realize that decisions are going to be made based on national security interests, national sovereignty. It's going to be based on what we're trying to accomplish both domestically and globally, geopolitically. And just because things might not pencil out perfectly on a spreadsheet doesn't mean these projects aren't going to get funded or that they're not going to continue. And even if they have a negative economic impact or a potentially negative social impact due to national security reasons or preferred outcomes that the administration is trying to accomplish, they might happen anyway. And it's important to understand that reality. So what we're going to do is we're just going to kind of review a little bit where we're at with the tariffs and why it's so important to understand them. But the big question is the U.S. losing the trade war, or have we already lost it? And if so, what are the ramifications? Or maybe we haven't lost it, but what are those ramifications? But regardless, let's just kind of walk through where we were a year ago and bring it up to date where we are now. Well, if we look back last year, prior to Trump getting elected, and listen, all of this stuff hinges off of Trump because Trump has said many times, tariff is the most beautiful world he's ever heard. And this is his preferred method to accomplish both his domestic goals and his geopolitical goals. This is central to everything Trump does. And that is why it's important. But prior to him being elected, the tariffs the average applied tariff that we would put on goods coming into the U.S. was a little over 1%, whereas most of the world was much higher than that. The weighted mean was around 4%. But Trump obviously didn't want to do it that way. He'd been telling everybody along the campaign trail, and also since he got into office, that tariffs were coming. And when he announced Liberation Day in early August, he put a 10% baseline tariff applied universally. And he started saying we were going to put country-specific reciprocal tariffs. And those were announced, I think it was on April 12th, and many of them were over 12%. And it was the uncertainty around all of this and kind of the size of them and the forcefulness with which Trump was implementing them that caused the uncertainty in the market and which led to the big drawdown in risk assets. Now, why people were surprised, I have no idea, because he couldn't have telegraphed it any more than he did, but there was still a lot of uncertainty, which led to the big sell-off. But this is an example of some of the Liberation Day tariff levels, reciprocal tariff levels that were put on. Obviously, the big one was China, and the fact that he kept ratcheting it up versus China is what led to a lot of the uncertainty and downside when you've got the two heavyweights going at it. Even the little guys often get hurt. But even if you take China out of it, these were some large tariffs. EU at 20%, Japan at 25%, South Korea at 25%, Vietnam at 40%, Taiwan at 30%. I mean, the UK at 10%. These were big tariffs that people were surprised at, and many said that this would never be implemented. When it got around to negotiating them, They wouldn't come in anywhere near to this, and Trump would end up probably losing out even more than he already had. But in the midst of the chaos, he kicked the can down the road. He said, now that I've stated the amounts, we'll kick it down to July, and then we'll start negotiating one-on-one, with the countries. But if we don't come to an agreement by the time July, August gets around, then those reciprocal tariffs go into effect. Again, 10% was the baseline. But it gave time for many countries to come and try to come up with a better deal than was on the reciprocal tariffs. So let's start looking at some of those agreements that are now in place. So if we look at the trade agreement with Japan, a year ago tariffs were less than 2%, and today they're closer to 15%. Even on automobiles, which has historically been the big one that nobody wanted to touch and that nobody in the United States wanted to enforce, even that went from 2% to 15%. So it's hard to look at this chart and say that Trump lost this negotiation with Japan. Again, this doesn't mean that we like tariffs. It doesn't mean that you have to support his policies. This is just a matter of acknowledging the data on the graph and saying this is quite a difference from the way it was a year ago. And so people who said this wouldn't happen, that's wrong. It did happen. There it is. And I think it's important to acknowledge that. Not only that, but a lot of people said, well, this is going to lead to the price of goods, especially automobiles coming into the United States, is going to skyrocket. Well, so far that hasn't been the case. In fact, prices have come down. And you can go to Google and you can look it up, and there's many articles discussing the fact that the Chinese automakers have largely been eating the tariffs so far. Now, I did see this headline just yesterday, which indicated that Japan's automakers are going to start to pass some of the costs back on to the buyer. But as of now, it hasn't happened, so we'll have to kind of keep track of this and see how it goes. But so far, I would say if you believe that Japan got the better end of this trade negotiation, I would like to understand the reasoning for that. But if we move on, we move on to the European Union. Again, at the beginning of the year, it was around 1%, maybe a little bit more. And now it's up to double digits, around 15% on most goods. And steel and aluminum is all the way up to 50%. So again, this is a dramatic difference from where it was a year ago. And it's dramatically different than what many people expected would be the ultimate case when he started putting the tariffs on announcements earlier in this year and when he rolled out Liberation Day. And if you think that this is wrong and that the EU once again pulled a 3D chess move and outsmarted the United States, just take a look at this photo. I mean, this photo basically says it all. This is all of the EU leadership, or much of the EU leadership, sitting in the Oval Office, basically kissing the ring of Trump. And they did because they don't really have much of a choice. And despite the rhetoric, at the end of the day, they agreed to the terms that Trump wanted. Now, again, we don't have to like this. We don't necessarily have to, be advocates for bully pulpit negotiations. But this is the reality that we're dealing with right now. And I think as investors, it's extremely important for us to acknowledge this. But let's look at the UK. The UK, again, around 2.5% last year. Now that's up to 10. And then on autos, it's down it's up from 2 to like 25%. So again, Trump was able to use the power of the United States to negotiate favorable terms for the United States. And let's move to Canada, because Canada is kind of an interesting case because they had a new prime minister come in earlier this year. Mark Carney used to be the head of the Bank of Canada. Then he was the head of the Bank of England. And now he came back and now he's the prime minister in Canada. And when all of this was breaking out earlier in the year, he was still running for election. He was obviously talking very tough. And he says the old relationship with the United States is over. And that, if the United States doesn't lead, then we will take over as the leader. And his favorite saying was elbows up. It's kind of a hockey term that we're going to play tough with the United States. Now, the day after he made those comments, I sent this tweet out basically saying, I look forward to how his tone changes pre-election when he's trying to get elected and post-election when he actually has to negotiate with the United States. And then, here's the deal that this elbows up guy negotiated. Again, around 2% tariffs a year ago, and now it's up on the non-USMCA stuff around 35%, and energy and potash is up to about 10. So again, hard to look at this and say that Canada got the better end of this deal. And not only that, but then I think yesterday, the day before, it came out that not only that, but Canada is going to drop the retaliatory tariffs that it said it was going to put on the United States products. And so, again, hard to, if you think Carney outsmarted Trump here, you can go online and, again, find several critical articles in Canada of what he's accomplished, because nobody wanted to bend the knee to Trump, obviously. But that's essentially what Canada has done so far. But let's look at a number of non-Japan and China Asian countries. And again, tariffs are dramatically higher on a number of Asian countries this year than they were a year ago. And again, this isn't to look, and this is fantastic. We don't have to like tariffs. In many ways, tariffs is just a tax, and nobody likes taxes. But, if we're just analyzing whether Trump was able to get more favorable terms than we had a year ago, I have a hard time looking at this chart and figuring out how he got the raw end of the deal here. I have a hard time figuring out how this is, a 3D chess move for these Asian countries, and how they're outsmarting Trump on this. And if we look, if we just look at the overall average, right? The overall average was a little over 1 a year ago, and now it's up, about 16 or 17. So again, a huge difference. This is a huge difference than it was a year ago. We've talked about this before, and we've talked about the tariffs being implemented is in many ways throwing a stick in the spokes of the global rules-based order. This is the United States rewriting the rules-based order that was put in place post-World War II. And the craziest thing about Trump rewriting it is those rules were originally written to favor the United States. But as many of us know, over the years, those rules ended up hollowing out the American manufacturing base. And in many ways, you could say it led to the leaders in Washington and Wall Street selling out the average American in order to get higher profits. And so Trump has come in, and he's basically throwing that rules-based order out the window. He's no longer doing things for the global good or the collective good. He's only doing things if he believes, and his administration believes, it's for the good of the United States. Now, we've actually written a lot about, if you like this type of stuff, we've written a lot about this on our research piece. I would encourage you to go over to our research offering. If you go to research.santiagocapital.com, you can see, a number of different pieces that we have written on the topic. But it's really, really important to understand the structure that we used to have and understand why and how Trump is tearing it down, and then try to understand what type of new structure we're going to have going forward. Now, I know, in addition to just the favorable trade deals that have so far been negotiated, this is going to lead to a lot of revenue, and it's projected by the Congressional Budget Office that over the next 10 years, it'll provide over $3 trillion in revenue, and it helps reduce the deficit. Now, listen, whether this ends up being the case or not, I don't know. We're going to have to wait and see. But the bottom line is that $3.3 trillion in revenue did not exist a year ago, right? Now, I'm not saying, and first of all, that's not all going to happen in day one. But the point is for people who said it wouldn't happen and couldn't happen, it's happening. And it's really important to understand that, because they're not going away. They're here to stay. And I would argue that so far, because Trump has been successful in negotiating these favorable trade deals, I would say rather than, off in a corner licking his wounds, he would be more ingratiated or more inclined to try to put more stuff on and negotiate even more favorable terms, rather than running back and saying, oh, I made a big mistake. But let's look at some of the other things that have come about as a result of this tariff war. Foreign investment commitments into the United States. So in addition to the trade deals and the tariff levels, we've got a number of different countries committing to make investments in the United States. 1.4 trillion from the UAE, a trillion from Qatar, a trillion from Japan, another 600 billion to a trillion from Saudi Arabia. I mean, this is real money. And listen, people say, well, this is just an announcement. It hasn't happened yet. Well, yeah, duh, of course, I get that. But the point is this stuff wasn't being announced and these plans weren't being made a year ago when Trump wasn't the president. So again, I think it's important to understand that this so far is emboldening Trump to do more rather than less, because so far it's working out in his favor. Now, that doesn't mean there's not going to be unintended consequences. Doesn't mean there's not going to be big mistakes. Could be some big mistakes on the way. But again, if we just go by the data so far, he hasn't exactly been kicked in the head. Let's look at some others. These are actual announced manufacturing facilities in the United States. And again, no, they haven't been built yet, but it's there. I mean, it's just these things have just been negotiated, right? But we've got TSMC expanding in Arizona. We've got Samsung in Texas. We've got Toyota in North Carolina, Hyundai in Georgia, Honda in Ohio, and Siemens in North Carolina. So again, you start to add this stuff up, it ends up leading to some jobs that weren't there. And perhaps, this is what all of the tariffs are about. It's about reversing the flow of capital and labor, and it's about bringing back a sense of manufacturing capacity, national security in order to make these things ourselves and not be so reliant on the rest of the world. Doesn't mean it's going to work out perfect, but this is why it's happening, and I think it's important to understand that it's not going to stop. Doesn't mean it's going to work perfectly, but it's not going to stop. And then, there's just a couple other ones. This is U.S. companies that were doing things abroad and now have committed to bringing them back, whether it's GE in Kentucky, Intel in Arizona, Apple in North Carolina. But the point is like reshoring, maybe it's slow, but it is happening, or at least it's happening more than it has historically. Again, we don't know how successful it will be. But if you are trying to right many of the wrongs that you see as a result of trade policy and Wall Street monetary policy, however you want to define that, whatever those things are that you believe led to the rise in inequality, what the Trump administration is trying to do is, as they see fit, trying to fix that. Now, you might not agree with the way they're going about it, but that's what they are trying to do. But I haven't talked about China yet. And the reason is the China deal is still out there. And we might not get a deal with China. The reason I mentioned all those others first is all of those others, while they are important, and I think Trump is happy to have the revenue generated from them, I would argue that a lot of that putting pressure on the rest of the world is being done in order for the rest of the world to help the United States put pressure on China. All of this whole thing, everything is about the United States versus China. Now, even when you're dealing with the UK, it's about China. Even when you're dealing with India, it's about China. Even when you're dealing with Alaska, it's about China. And so, this is the big game. We've talked about this, and this is, the China is trying to rise on the global stage, and the United States is trying to keep China in a box. And, there's obviously going to be some friction. There's obviously going to be some rattling of sabers. The big question is who gets the better end of it. And the short answer is we don't know yet. But as you know, I think the United States has many more cards that it can play than many people realize. And what we've seen so far this year is the U.S. being using its power to negotiate. And it's using the power of the United States consumption economy. A lot of times people will say, we don't make anything more anymore. We're just a consumer society. And that's, that puts us at a disadvantage. That definitely puts us at some disadvantages. But I think people underestimate the power of the biggest consumer demand in the world. And anybody who has ever worked in sales knows that the customer has power. And in many times, the customer has more power than the one doing the selling. So that's something to keep in mind. We'll have to wait and see kind of how the China trade deal works out. The big, I think the big reason why they're dragging their feet and trying to work this out is, China supplies the United States with two critical things, rare earths and a lot of medicines and pharmaceuticals. The flip side is that the United States provides China with food, provides them with dollar funding, provides them, with energy in some cases, and so it's kind of a mutually symbiotic relationship right now, and each side is trying to become self-sufficient. But I think that is why we haven't had a resolution there yet. But I also think that is why there has been resolution with the other countries, because that this showdown between China and the United States is ultimately what it's all about. Now, I know some people will say you can't win in a trade war. So even though Trump has gotten these good, better levels than he had a year ago, it's basically a tax. It's going to lead to less efficiency, and it's going to cause growth to fall, and nobody wins a trade war. Now, if that's your argument, I tend to agree with you. But that's a different subject, right? If you want to say that nobody wins in a war and that's going to hurt everybody, fine, I'll go down that road. I think it's a relative game, and if everybody falls but the United States falls the least, then on a relative basis, the United States has maintained its hegemony. But I have a hard time going through all those numbers we just went through and those trade deals that we just went through and see how the United States got so screwed in all of that. And if somebody wants to make the case to me that some of those countries that I put up there actually out negotiated the United States, I'd love to hear your reasoning why that is. But ultimately, I think it's important to keep in mind that the tariffs are largely just a small battlefield on a larger war. Maybe not a small battlefield, a big battlefield, but part of a larger war. And I've said this many, many times. We are in a Game of Thrones. This is the big, big game. It's the one for all the marbles. And I think if you analyze it through that lens and start thinking about things from a power perspective rather than a purely economic perspective, it's going to help you see the world more clear. I sent this tweet out the other day, basically saying just that. I said, you're going to understand more about what's going on in the world today if you watch Game of Thrones than if you spend time reading The Economist or monetary policy reports. I told my son a couple of years ago, you'll learn more about how the real world works by watching Game of Thrones than you ever will in 4 years of college. And he kind of brings that up every now and then and laughs about it. But I promise you one day he will go to college and then he will come back and he will say, Dad, you were right. And so anyway, maybe it's not always nice to think about, but that's what's going on. It's a big game of power right now, and everybody's trying to exert their power and exert their will, against the other side. And one thing I would say with this is, while I don't necessarily love it, this is kind of what hegemons do. The Robert Gilpin wrote a book that was seminal to my understanding of how the world works. He wrote a book called International Political Economy. It was kind of the Bible of our graduate school. And it's where we learned about the rules-based order and how it was set up and why it was set up and why it was set up, the reason it functions the way it does. And he says the historical record suggests that the transition to a new hegemon has always been attended by what I have elsewhere called hegemonic war. And that is, people a lot of time will say that the United States has lost hegemony and there's going to be, a rise of China or whoever it is, and that's why the dollar is going to fall and, the U.S. can't possibly win. But the thing is the United States is not going to lose hegemony without going through a huge battle. And we could probably reclassify that battle as war. And again, I have a hard time seeing how somebody else knocks the United States off in a hegemonic war. I hope to God I never find out. But I think this is largely what's going on. There's also another quote called, that says the war is the health of the state. And I don't necessarily 100% agree with this quote. I have a few little issues with it. But even though I don't totally agree with it, I have a hard time saying it's wrong. And if I had to defend it and argue this side, I think I could do so very well. And so I think it's important to remember that. And finally, one thing I would say is being the hegemon means being at war. If the hegemon wasn't at war, then it means nobody wants to challenge the hegemon. But there's always somebody who wants to challenge the hegemon. There's always somebody who doesn't want to listen and wants to do things their own way. I mean, I have a hard time believing I would just do everything that somebody else told me, and regardless of how big they were, right? But I may end up paying the price for my actions as a result. But the point is that hegemons, kind of by definition, are always at war. And as a little bit of proof of this, in the 250 years since the United States became the United States in 1776, I think we've got the 250th anniversary next year. In the 250 years the U.S. has been in existence, I believe they have been at war with someone for 230 of those 250 years. Now, we weren't always the global hegemon, so perhaps that's not the right way to think about it. But let's go back to the end of World War II. Since the end of World War II, there's about 85 years or 80 years or whatever it is. And I think out of those, 80, I think out of those 80 years, I think like 73 of them, the United States has been at war with somebody. Now, that's like 90% of the time. So again, I think that's just being the hegemon, and that's the deal. That's how it works. There's great advantages to being the hegemon, incredible advantages. It's like the One Ring in Lord of the Rings. It provides so much power, and it allows you to do things that nobody else can do. But the trade-off, just like in the Lord of the Rings, the trade-off to holding on to that ring is that you kind of go crazy, and your heart turns black, and you start doing things you shouldn't do. That's also kind of part of being the hegemon, And again, if World War II ended 80 years ago and we've been at war 70 out of those 80 years, it's kind of hard to say that that's not the way of hegemony. So again, we don't really love that, but that's the way the world works, and that's what we talk about on this show. Now, I'm just going to make a few comments about the markets. I didn't have time to add some slides here for that. But I'm going to write about it on Substack. So if you want to, to hear my thoughts on the markets, stay tuned. You can go to research.santiagocapital.com and sign up over there, and we'll try to put out a summary on this last week. Long story short, Powell indicated that we were going to probably have rate cuts in September. The Dow rallied to a new high. The S&P kind of ended flat for the week. The NASDAQ still ended down the week. Everything had a big rally on Friday. But we've got this divergence between markets. And you guys know last week I said we're going to have a hard correction by the end of Q3. I'm not changing my mind on that. I see nothing to take me off of that call. In fact, I think, even if we rally into the Fed meeting in the middle of the month, I think it'll be largely priced in. I don't think that the market is going to like, if they do get a cut, I'm not convinced that the market is going to like it. So anyway, hope you guys have a great week. We'll catch up with you again next week.